Hey guys, welcome back to my channel. It's the Queen Wealth here today. We'll be discussing stock option fundamentals for beginners. So my friends, my family, my co-workers have been asking me to do this video for a minute, but I've been so busy with work, with life, with this pandemic, that I haven't had time to really do it. But today, guys, I am finally doing it. Yay! Okay, so before we get into this video, don't forget to like, to subscribe, and hit that notification bell so every time I drop a new video, you will be notified. Secondly, I am not a financial consultant, and this video is for educational and entertainment purposes only, so please check with your financial consultant. That can mitigate your own personal risk. So now let's jump into the topic. So today we will be discussing, option fundamentals. What are options? Option has been around for years, but only, within a few couple years it have, gained popularity amongst, us folks, right? So what are the difference between stocks and options, and how to analyze stocks and pick your options, and some of the free resources that are out there for us to use. Before we jump into, the meaty of the discussion, I like to start off with a quote. I love quotes. This one speaks to our topic at hand. So it says, not investing in the stock market because we could lose money is like saying, I'm not going to swim or go to the beach because I could drown. Don't avoid it. Just learn to navigate it. Just like everything in our life, we learn to integrate and to make it work for us. And that should be the same thing, or the same attitude we bring to investing in the stock market or trading option. Don't avoid it. Just educate yourself and learn to navigate the system, right? So options allow you to play with the big boys without putting up the big dough. It gives you leverage. You need less money to invest, and you have the opportunity to make a huge return on your investment. Options give you the opportunity to not only make money when the market goes up, but also when the market goes down. So unlike the stock market, the regular stock market, where you only make money when your stock is going up, that's when you make money. But the stock option gives you the opportunity to make money when the market goes up and when the market goes down. Yeah, it also allow you to buy into expensive stock, allow you to play with the big boys without putting up the big dough. It gives you leverage. You need less money to invest, and you have the opportunity to make a huge return on your investment. Options give you the opportunity to not only make money when the market goes up, but also when the market goes down. So unlike the stock market, the regular stock market, where you only make money when your stock is going up, that's when you make money. But the stock option gives you the opportunity to make money when the market goes up and when the market goes down. Yeah, it also allow you to buy into expensive stock at a discount. Exemptions give you the right to buy or sell a stock, at an agreed price at an agreed time. So basically it's a contract that has an expiration date, like you're leasing a car, you're like leasing the stock option. There's two type of contract. You either buy a put or you buy a call. You could sell a put or you could sell a call. And each contract is 100 shares. So you either buy or sell a call, like I just explained. So the best way to remember these terminologies for me, because I was like, why are they using buy a call, sell a call, buy a put, sell a call? I'm sure they could use another terminology. Well, it is what it is. So you have to learn these two terminology, because when you go to buy or trade an option, you're going to see either be buying, selling a call or a put. So the best way for me that I learned how to remember what the difference between the two. So you're going to call up someone, that means you're saying your call, that means a call is going to go up. You're betting that the price is going to go up, so you're calling up that the price is going to go down. And you could put a put, meaning the call is going to go down, so you put that put down that the call is the price is going to go down. So call up, you're saying the price is going to go up. A put down is that the price is going to go down. These are two different, like 360 definition. I'm like, terminology, like why do they have to use it? But it is what it is. That is how you're going to see it. So just learn and navigate, right? So option has expiration date. Like I said, it's a lease. It could be for weeks, months, or years. Versus stocks. Stocks, on the other hand, you own that stock for as long as you're alive, or you transfer that stock to a family member, or that company goes out of business, and then that stock is no longer yours. Versus the stock option, it has an expiration date, so you're buying that stock for you're leasing that stock for a certain period of time. If you want to look at it like that, you don't own the stock, you're leasing it, and once you make that money on the lease, before that lease is up, then you sell that share and you collect. You don't lose any money, you just collect the money that you have made on that stock. So that's the difference. And like I said, they have an expiration date. So the further out the expiration date, let's say versus a week expiration date, is way cheaper than if you have, let's say, 5 months out of expiration date. Is going to be a lot more expensive. The reason why it's a lot more expensive because they're saying that it gives you the opportunity to recuperate your money. So therefore, it's going to cost you a little bit more for a longer expiration date. But I personally love a longer expiration date. I do my stock option 4 weeks or more maybe 4 months out, because time is your friend. Like if you were to buy an option that expired in 4 weeks today, and tomorrow the stock market opens and you see that you're up $500, and you want to sell that option and get your $500 and get out of there, there's no penalty. You sell it, you make your $500. You kept your money that you put in there, and you make $500 on that money, and you sell that bad boy and get out of there. Or some people, could say, oh, this stock is running. I'm gonna wait till and see where it run to, and you still have time. So time is your best friend, right? Other terms to be familiarized with is at the money, at the money, out of the money, and in the money. So at the money meaning that you're buying a contract that is closer to what the stock is selling for. That is what at the money is. That you're in, which is a little bit more expensive. That is at the money, closer to the stock price. So that means if the stock goes up by $1, a couple of cents or something in that area, you're more likely to see a return faster than if you buy a stock that is out of the money, which is, we're talking about calls. So calls and puts is a little different. So we're mainly talking about calls. So if you buy a stock that is out of the money, that means that you have to wait a little. As the stock price go up, you got to wait a little longer before you see a return on your money. And out of the money is a lot cheaper. Versus when you buy in the money is below the share price, and it has a value already baked in it. So once you buy a stock that is in the money, as soon as you buy that stock, you already have a value in it. That means that you might see a couple dollars, a couple $100. So you already have a value. So, like anything else, just familiarize yourself with these definitions, with these terminology. You don't have to know everything to trade option. Like I said, this is just the basic. And below in the description box, I have, a course down there that could take you through the more detail, and I show you how to navigate Robinhood and some example of the stock options, what I have purchased, and the different resources there are. So if you want more information, it's down below in my description box. this is a different, like I said, this is a different type of a hustle. You can make money while on your regular 9 to 5. This is not a day trade. You don't have to babysit your option. You can set stop limit and stop loss where it triggers Robinhood to sell your shares when it hits a certain high or it hits a certain low. It's another form of residual or passive income. I don't have time to babysit, to sit there, to check every hour. I'm working, I'm busy, I don't have time to do that. You could set limits, put it there and let that money work for you pretty much. So how do you pick your stocks? So like I like to tell people, you got to stock your stock. You got to investigate that stock like it's a new dude that you are dating. You want to know everything there is to know about that stock. You want to look at their earnings, their 52 weeks lows, their 52 weeks high. You want to look at their cash flow. You want to, investigate their CEOs, kind of fuddy-duddy, what the hell, they got going on over there in that company. So with anything, you have to investigate. You got to do your homework. Just don't buy off emotion. You got to, know the company, pretty much keep your ears to the street. What is out there, what is going on. Like I said, I told one of my friends, I went to Burlington a couple weeks ago and the line was long. I was like, God damn, what the hell are they giving away at Burlington? Why the line is so long? And I was like, so the first thing come to my head, I wonder how their stock is doing. So I bought an option on Burlington, and I know, it's the holiday coming up. Granted, we have the pandemic, but people are still going to be shopping, and sure enough, people are still shopping, and I am making money on my option. So my Burlington option, which I bought a long option that does not expire until December. So I bought it 3 months, either 3 or 4 months option, because I know everyone shops at Burlington. I went there, I saw the crowd, I was like, what the hell are they giving away? And ding, 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 I was like, I'm gonna buy an option. It's the holiday season. That is what's going on. So, like I said, you go into a place, this is the same, I know, you thinking the same thing. What the hell? I wanted to put my stuff down and walk out the goddamn store. I was like, nobody gonna stand in this long line. But, sometimes you go into Burlington, you get some good, I went there for home decor. So you go in there, you get some good things. So yeah, and don't sleep on Burlington. Their shares is almost it's $212 a share. So just to show you there, you're thinking, but yeah, their shares are not expensive. I mean, not cheap, my bad. Their shares are not cheap. So I'm just saying, just do your homework, pay attention to what's going on around you, and this is part of the way you get into the play. So when do you buy and when do you sell? So pretty much I say you buy low and you sell high. You pretty much ride the wave. So when it goes down, that's when you buy. When it goes up, you sell. It goes down, you buy. It goes up, you sell. So pretty much you get the idea. You're gonna ride the wave. You want to buy low and you want to sell high. Pretty much jump on, jump off, jump on, jump off. And the next thing you can look at is the volatility of a stock. There is different resources in my course. I give you different places that you could look, but there's different resources of different places you could look to see the volatility of the stock. The more volatile a stock is, the better it is for us that is trading option. Now, if you're holding it as a stock for a long term, you don't want to see your money dip, 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 dip. But as for a stock option, that is exactly what you want to see. An example is when Zoom was busting through, you see go zoop and you see go doop. Zoop, you buy low, and I was riding the wave of Zoom and I made a lot of money on Zoom. So that's what I mean. You want to see a stock that is volatile, very wavy, not a stock that is go like this and it might go like this and come back up like this. You want those dips. You want those dips on the stock when it comes to option. So there's many resources out there. Some of my favorite resources that I use Yahoo Finances every day. Let me put on some light, guys. I use Yahoo Finance every day. That is one of my favorite resource to use. I use it all the time, and obviously it's free, and you could, they have that you could buy a more advanced version of, to research, but I have the basic. Another resource is Investotopia. It is a Wikipedia for investing. So any information you want, anything you want to learn about investing, it's all there at your fingertip, free at Investotopia. I use Robinhood for trading my options. It's easy, it's simple, it's clean. It's a clean platform, not too much graph and all kind of stuff going on. So when you are new to investing and you're a beginner, Robinhood to me is the best platform. I also use Webull now that I'm a little bit more advanced, because they have a lot of analytical tools and technical information. It's a little bit for advanced traders, and those two websites are pretty much free. Also, TD Ameritrade has this platform called Think or Swim, where they'll give you, like, I think it's $100,000 of fake money that you could put in the market, and play alongside with the market and invest this fake money, just to get a feel for it, and before you play with your own money and without losing your own money. So that's a great resource there as well. And Charles Schwab is where I use for my long-term investment. And you could also do options on TD Ameritrade or Charles Schwab, but I do my options on Robinhood and Webull. And like I said, Charles Schwab owns TD Ameritrade, so now they're pretty much the same company. They have acquired, Charles Schwab has acquired TD Ameritrade recently, maybe a couple 4 weeks or so. They acquired them, so everything is at your fingertip, not like before. You don't have to go through a broker and pay a brokerage fee to trade. You could pretty much do it yourself, and the first thing you got to do is just educate yourself, familiarize yourself with the process. And pretty much, if you're watching this video, kudos to you, because you have taken the first step, right? And there's plenty more videos here on YouTube to watch and to gain knowledge. These accounts, like I said, they're easy to set up. You don't need someone to set it up for you. You could do it within less than 5 minutes. You could set up any of these accounts. Lastly, I love to tell people when it comes to trading option, don't trade with money that you need to pay your bills, right? You start small, because you can lose money, especially if you don't know what you're doing. And I don't want anyone to go out there and lose the money that they need for their bill or their livelihood. So start small. You can start small, a couple $100, $200, money that you don't care to lose. We all care to lose money, but money you're like, well, it goes 50-50. I might lose it, or I might make a couple $100 on it. So that's what I say. So you're gonna make mistake. Only by making mistake that you could learn and grow. And the first step, like I said earlier, is to educate yourself. And if you're watching this video, that is the first step in your educating yourself. And I am so proud of you. You're making the step to try to understand the market and this information that wasn't given to us. So just invest in yourself, and invest in educating yourself. And you can't go wrong by investing in you. You can never go wrong in investing in yourself. Lastly, I said, if I can do it, you can do it too. That's my mantra. If I could do it, you can do it too. Just learn and just learn to navigate the system, and just put your money to work. Like I said, pimp your money. Be a pimp of your money. Put your money to work. Putting your money in the saving account is not going to give you a return. If you're not doing the option thing, make sure you're investing into stock for the long term. You always wonder why the rich is getting richer. You want to know why the rich is getting richer? Because they use that money to make more money. They don't work harder. They use the money to make more money. So make your money work for you. All right? Put that money to work, y'all. So remember, this is not investing, this is trading, right? So what you want to do when you trade and you make some money, take some of that money and invest some of that money. Take some of that money and put it into a stock. Take that money, put it into a college fund. You could buy, put some money away for buying a real estate property or something. Investing is for the long term. Trading is for now, pretty much. And what you're going to do with that money is take that money and invest it. And I think, that's the best thing we could do, is to invest our money. That will give us a better return on our money, is to invest. So I hope you guys enjoyed this video. So go ahead and subscribe. Hit that thumbs up button, and don't forget to share this video and follow me on Instagram. So click on the link in the description box if you'd like to learn more about stock option and trading on Robinhood. Sorry guys, I know you guys probably hear my dog is barking in the background. Okay, yeah, but thank you guys for tuning in with me, and I will see you next time. Okay, don't forget, pimp that money.